What's up, guys? So I was in the middle of filming a little bit of YouTube content when a friend of mine sent me a post from Suze Orman's Facebook page. If you don't know Suze Orman, she's, the celebrity financial guru, kind of like Dave Ramsey, but the female equivalent. Anyways, she posted this really hot take about the real estate market. And I've seen a lot of people in our industry kind of already post and give their 2 cents. So I wanted to throw my hat into the mix as well. Kind of give you my 2 cents and why I think personally, for all the stuff that I do like about Suze Orman that she gets right about personal finance, whenever, Suze or, Dave Ramsey or others get into talking about real estate and mortgage, they really tend to miss the mark by a lot. And I'll explain why. I think this is a really important piece of information right now because a lot of people are really trying to understand what they should be doing with their money right now in the middle of this pandemic, right? So I want to kind of read a few excerpts of this post, kind of give you my reactions to it, and I'll put it up on the screen as I'm reading through it. So anyways, here we go. So Suze Orman says, I would absolutely wait until September, October, November of this year before I even consider buying a home. One concern is property values. Many people would have to make up their missed mortgage payments around the time federal unemployment is scheduled to stop on July 31st. It's true. This puts them in a difficult financial position, especially if they're still out of work. It's not impossible that your neighbors might have to foreclose on their home. Here's the problem. Let's say you paid $300,000 for a home today and your next door neighbor is out of work due to the coronavirus and can't afford to make mortgage payments, so they foreclose on their home. This is happening. People are foreclosing on their homes. Now, that house goes for $150,000. Do you know what that just did to the property value of that you just bought? Your property is now worth $150,000. Okay, so I'll get back to that in a second. Because when somebody goes to check the latest comp, they're going to see, oh, well, the house next door sold for $150,000, the house down the block, just like yours, sold $150,000, and there goes the price of real estate. And that's exactly what happened in 2007, 2008. So there's a lot of stuff that's kind of generally right there, but there's a lot of things that aren't really 100% true, I guess. So the first point is true, right? So she mentions that a lot of people have missed their mortgage payments. And it's true because a lot of places like Wells Fargo, Chase, lots of big mortgage banks have allowed their borrowers to go into forbearance on their mortgage. So that's 100% true. But that doesn't necessarily mean they're going to have to pay it all back right when this whole thing ends, as far as, the temporary stay on forbearance. There's a lot of other different options that are actually going to help homeowners so they don't have to make some sort of big lump sum payment. They can actually even enter into a payment plan and spread that out over 12 months. So there's a lot of ways that homeowners are going to be able to deal with, the mortgage payments that they've missed without really digging too deep into their savings. Now, I guess what is true is it will put a lot of homeowners into a difficult position. And I do expect that there will be a good amount of people foreclosing on their homes when this is all said and done. It'll probably be delayed though. I don't think it's going to happen right away, but I think it will happen. We'll see this probably 6 to 12 months from now. A few more foreclosures popping up as they can't keep up with those new payment plans. So the next bit is where it kind of gets out of hand, and I think she completely misses the mark. Okay, so let's say you bought a home for $300,000 and then your next door neighbor forecloses on their home and they have to sell for $150,000. Well, that's not true at all. The banks are going to foreclose on them and they're going to actually try to get a reasonable value for their home. It's going to be less than if, a realtor came in there and sold the home for them, but you're not going to see a 50% depreciation on the home, especially if yours just sold for $300,000. Your home selling for $300,000 basically indicates that your next door neighbor's home might be worth around $300,000, not half the price. Also, another thing is if you just bought a home, you're probably not an investor. You're probably just a normal working class American who wants to live in a home. So even if for whatever godforsaken reason, the prices of homes around you plummet, does that really matter if you're not selling your home anytime soon? And even in some of the worst markets, we've only seen a decrease in property values of, close to 15 to 20%. 50% would be just astronomically awful for the economy if that were actually to happen. But it doesn't happen that way. And also, let's just play it out and pretend for whatever reason, even if the home next door to you foreclosed and had to sell at $150,000, that doesn't necessarily mean that if you were to go sell your home, that you would have to sell it for $150,000. An appraiser would go out and actually try to figure out, okay, why was this home only worth $150,000. Maybe there was property damage on it because the owner knew they were going to foreclose anyway and they stopped taking care of the property. There's varying factors that play into the value of a home outside of, oh, this one sold for $150,000, so now everything around it is worth $150,000. So now, while I think people like Suze Orman, like Dave Ramsey, like all these other financial gurus and celebrities have a lot of good advice on personal finance, I think that when it comes to real estate, they don't really necessarily know what they're talking about 100% of the time. So question of the day is, when's the last time that you got quote unquote good advice from a financial guru that turned out to be false? Leave that in the comments below. And let's have a conversation around, what was that bad advice and what did you actually do that ended up playing out for you a lot better? Now, anyways, personally, just looking at this situation, if I'm an essential worker in the middle of a pandemic and I'm in a position to buy a home right now, I would definitely do it. Simply because with the millions of jobs lost, there's a lot less competition in the marketplace right now amongst buyers. So you're able to get your offer accepted more than likely without having to, go into a multiple counteroffer situation and have to start getting into a bidding war with another buyer. You can get into a home a little bit more easily now. Number two, with interest rates being so low, that's going to do two things for you. Number one, of course, you're going to have a lower payment, which means you're going to be able to build equity a lot faster in your home. And number two, with lower interest rates means you have a bidder. And number two, with a lower interest rate, you're going to have more purchasing power. So maybe if a few months ago or even a year ago, you could only afford, a $400,000 home, maybe with lower interest rates, you'll be able to afford a $420,000. $20,000 difference in home price might put you into a home that you're really going to enjoy living in rather than just settling for a piece of property. So for everything that Suze Orman and Dave Ramsey and all these people say, I think for the most part, we can agree that if you can buy a home right now, you should buy a home right now if you're in a position to do so. Otherwise, you can continue following these guys for their personal finance things on how to open an IRA account or an IUL or whatever else they're talking about. But when it comes to real estate, don't listen to these guys, listen to your local experts. So I hope you guys got a lot of value from this one. I know it's a little bit different from the kind of content that I usually put on here. So let me know if this is some kind of content that you like to see, more reactions to other financial gurus and my thoughts as a licensed mortgage professional on what I think is actually the truth behind what these guys are saying. If it brought you some value, make sure you leave a comment, like, and subscribe to the channel for more content just like this. And until next time, first one in, last one out. See ya.